What is going on, guys? Welcome back. Commentary for you. I want to continue the investing videos. As always, there's a link down to Webull in the description. You will get a free stock if you sign up and another free stock if you deposit more than $100. We are working with a very small account here, $120, the equivalent of $10 a month. I felt that was a fair price, and we did make our first purchase on Thursday. The markets were closed on Friday and, of course, are closed for the weekend. The purchase we made with CVS, and I'm already learning just a little bit about how this smaller account can help me grow as an investor. I set a price limit, $64.99. I watched this stock at $65.05 up to $65.15, and generally in a time where I would just sit and worry about the market and try to catch it at its lowest point, I set a price that I felt was fair. My value assessment, I wanted to be below $65. I set it for $64.99, and I walked away. And two things. I was content if it didn't go below that we wouldn't get it. And I was happy if it did hit that price point, even if it went lower, which it did. We lost about 29 cents on a drop. I was still going to be okay with that. So that was one of the first things I really want to dedicate myself with here, is not being overly worried. Set the price point and walk away. So this stock actually does a couple things for us. Number one, it puts us in line with a major brand. I'm sure everyone knows CVS. They're a large company. They're also very tangible to me. I've got one right down the street. I know what they do. I know where they are. I can easily go and support them beyond my investment. And that's all important to me. The first video I talked about, learning about the companies that you are buying and understanding their business lines. So I understand to a degree what CVS does. I also know that given our climate, they're also going to be in demand. They offer free testing, screening. If vaccines come out, they're going to be in demand. They offer a community products and services. But, we also have to think about the fact that they are a growth stock. Later on this month, they're going to declare a dividend. I would hope that that's going to stay in line with what they've had in the past 3 years at 50 cents. They have had a bit of a variation in their price point. So been around 52 at the low, 77 at the high. I think when you look at price targets, we're right in that ballpark now where we're on the low side of this. We're in the middle of where they've been. We're on the low side of what people assume they will be. So even though half the money is being absorbed by this, it's important to understand that we checked a lot of boxes, right? We got a dividend payer. We got a fair value on a stock. We've got one that seems to be growing and has future demands. CVS has over 10,000 established stores. They have their Minute Clinic brand to check basic health factors for people to come in terms of just having patient interactions. They have a health hub that's starting to grow into that process. Beyond healthcare in their stores, they've got major roots as a pharmacy manager and insurer. I think really the only downside we need to consider, at least for us, of course, being half our investment really, is it is going to be kind of a politically aggravated stock. So as we get into the elections, you're obviously going to have healthcare always a talking point. So we could see a little bit of volatility. But again, I'm okay with that. With the price point I set, I've built that into the price. The $64.99 has that built in, right? So if I liked it at $64.99, theoretically, wouldn't I love it at $62, $60? And we may not have an opportunity to put more money in, but because I've set this price target in my mind, it's important that we grow with that going forward. So to me, I also want to say I looked at Walgreens. Walgreens about $20 less, which would have been nice given our budget, but I just don't think Walgreens has all the other secondary factors. They're not as involved in the insurance process. They're not as involved as a pharmacy. So to me, I feel like that was the real key difference here. Getting a much larger company, but also getting one that's based in other sectors provides me a bit more stability than just simply, here's a healthcare store. And some people may not know as deep as CVS runs in overall healthcare. But again, that's learning about companies and understanding come November, come December, probably even into starting September, October, there's going to be some volatility as we go through an election cycle. But again, I'm prepared to deal with that because I've set a price I'm comfortable with. I got the stock for that cost, and now we still have some other money to consider whether we invest now or whether we go forward. One of the other things that I've really learned about this process is cash is a position. I used to think when you put money in the market, just get it into stocks, get it into something right away. And this has taught me that doesn't always need to be the case. I'm going to hold this money until something comes along that I see as a value, whether it's a stock, whether it's a REIT, whether it's maybe even something that's just going into the market. whether that's going to be a SPAC or not. So those are things we have to consider going forward. But right now, we did add this initial first position. I appreciate you guys watching this video, and I will be back in the week with more commentary.